Welcome to another S&P 500 analysis. Today is September 3rd, 2022. The month of August did not contribute to the typical summer rally. Instead, the S&P 500 lost 176 points or 4.26%. So far, September is not starting the new month any better. So is the S&P 500 setting up for a huge move down? In this S&P 500 analysis, we'll look at the sentiments, the market internals, and the price action of the S&P 500 and the other major market indexes and see if the S&P 500 is being set up for a huge fall. And along the way, we will dispel a perpetuated myth. Stay tuned. Just a reminder, I will post a separate video on Sunday evening where I will discuss the price level and the price scenario to watch for the SPY, QQQ, IWM, and a couple of FANG stocks, Apple and Tesla. And be sure to check out my Substack page for additional posts during the week. The link to my Substack page is smtraderCA.substack.com. You can find this link in the description below and also in this channel's About page. And if you like the content in this video, be sure to click the thumbs up to give it a like. This will help promote the video on YouTube. And if you have not subscribed to this channel, click the subscribe and the notification icon. And if you have any question or comment or suggestion, please post them in the comment section below. Now in this weekly chart of the S&P 500, we see another gap down open to start the week. The S&P 500 printed another weekly bearish candle. For the week, the S&P 500 had a range of 159 points. It lost 133 points or minus 3.29%. It is continuing this one-time framing down and closed below the 10-week and the 40-week moving average and still holding above this June low. Since August has come to an end, let's take a quick look at the monthly chart of the S&P 500. You can see August ended the month with a shooting star-like type of a bearish monthly candle. Now, this shooting star doesn't translate to a lower prices for the next candle. We see two examples of the follow-through candle from a shooting star candle. Here we see the shooting star in the following month candle is actually negative. But then again on here, we see a shooting star the following month is actually a bullish candle. So don't just look at a single individual candle and try to draw any conclusion to it, what price might be for the coming month. Always look at the price action within the context. Now, I have also marked off the month of September for the last 20 years. The down arrows indicate a negative September and the up arrow indicate a positive September. And from my count, there are 11 out of 19 September ended up and 8 out of 19 September ended down. And we just started the current month of September, so we won't know how it ends until it finishes month. But from these stats, September doesn't seem to be a down month majority of the time. As a matter of fact, the last 20 years show that it has been up more often than down. So where are the stats from those people that keep perpetuating these myths that September tends to be a poor performing month? Nowadays, there are so many people on social media perpetuating what they heard or saw without any knowledge, whether it is factual or just a talking point or simply just a myth, and for no other better words, a make-believe or just a lie. So be careful on believing what you hear and what you see in the social media. Most of the stuff on social media are just perpetuated by content creators without any fact to back up their claim. Now let's go and take a look at the sentiment and the internal before we take a closer look at the price action of the S&P 500 and other major market indexes. On this sentiment chart, we see the VIX is still inside of this 20-30 zone, and we are not seeing a surge up above this 30 level. This indicates the market participants are still being cautious, but not extremely fearful. And also the put-call ratio is near 1. That implies the market participants or a bit more risk off. And looking at the up-down volume ratio during last week's decline, the most negative reading for the New York Stock Exchange up-down volume ratio was 4.28, and that was on Tuesday of last week, where the S&P 500 lost over 1.1%. or a little bit more than 44 points. And contrast that with Friday loss of 42.5 points or 1.07%. The up-down volume ratio was only minus 1.38. So similar performance in terms of point loss between Friday and Tuesday, but the up-down volume ratio was much less in favor of the down volume for Friday than on Tuesday. So similar contrast for the daily advance and decline. On Tuesday, there were 1,849 more declining issue than advancing issue. And on Friday, it was only 489 more declining stock than advancing stocks. So these two internals tell us they are not getting any worse with further decline from the S&P 500. And for the new high, new low, we are seeing a slight increase on the number of stocks making new 52-week low. But that number is still relatively low compared to the 1,099 stock make new 52-week low back in June of this year. So not much has changed in terms of the number of stock making new 52-week high. And the cumulative AD line for the New York Stock Exchange do not show any divergence between the S&P 500. And the cumulative New York Stock Exchange AD line does not show any divergence between the S&P 500. And looking at the NASDAQ up-down volume ratio, it did not get extremely negative during last week's decline. It was hovering between minus 1.5 and minus 3.5 level. And the daily advance decline is still holding above the minus 2,000 level. Looking at the NASDAQ up-down volume ratio, the NASDAQ up-down volume ratio did not get extremely negative during last week's decline. It only been hovering between minus 1.5 and minus 3.5 level. And the daily advance decline is still holding above the minus 2,000 level. And for the number of stock made new 52-week low, the 52-week low is still hovering within this 200 range, with the exception of Thursday last week, where we had 431 stock made new 52-week low. And there's no divergence between the NASDAQ 100 and the NASDAQ cumulative AD line, but the NASDAQ cumulative AD line is getting close to the June's low. So we need to watch this closely. So from the sentiments and the internals, the market participants are still being cautious and risk off. And the internals are holding steady and they are not building momentum to the downside. Now let's look at the indexes, starting with the S&P 500. On this daily chart of the S&P 500, see the price came down to the bottom of this expected move, the low range of last week's expected move, and also held this trend line support. Now for the coming week, the upper range of the expected move is between 4,035 and 4,017, and the lower range is 3,831.50 and 3,810. So looking for the downside scenario, we look for the lower range to get tagged, and then the gap fill near this 3,800 level. On the upside, the upper range and the 4,100 level here. So if we could move to the upper range of the expected move, then look for this price zone to get tested. And on this daily chart of the NASDAQ 100, you can see that the NASDAQ 100 came down and tested this pivot high here near the 12,128. And if we could stay above this 12,000, essentially this zone here, this 12,270 area, then look for the price to make a move up toward the 12,760 area, this price zone here. Now, if we take out the 12,000, if the price dip below this zone and dip below 12,000, then look for this gap fill here, and that would be somewhere around the 11,770-ish. And if dip below this zone here and move below 12,000, then look for this gap near the 11,770 area to get filled. And for the Russell 2000, saw the Russell 2000 coming down to test this pivot high near the 1792 area here. And if it doesn't hold, then watch the 1712, this area. If the Russell 2000 could move back above this 1850, then look for this 1935. And for the Dow Jones Transportation, look for a move to get back above this 14,000 level. And if we could get back above this 14,000 level, then look for this 14,500. If it's unable to get above the 14,000 level, then look for a downside below this 13,500 and possibly come down to this 13,000 level here for this gap fill down here. And the Dow Jones Industrial is sitting on this trend line here. Seems to be have found some support. So we'll see would it be able to hold above this trend line. But if it's unable to hold above this trend line, dip down, then look for this gap here to possibly get filled. And that would be down here somewhere around 30,790 area. And if it could hold this trend line, then look for upside to see would it be able to get back above this zone here, above the 32,000 level. And for the New York Stock Exchange Composite, it finally came back into this double bottom pivot high here. So we'll need to see if it could be able to get back above the 15,000 level. And if it's unable to hold this pivot high support here, then we could see it come down to possibly the 14,000 area and possibly retest the June low or the July low in this case. Now looking at the 10 years yield, we see the yield is pushing up against this 3.25%, and we're still basically looking for the 10-year to come up to 3.75%. And the US dollar continued to show strength, and it is sitting at a 20 years high, and it appeared to be heading toward this 112.5 level here. This is basically a 618 major move from this consolidation range. And oil is still bouncing around between the 85 and the 95 level. So look for it to either break toward the 100 or break down toward the 77. Silver is back at the 1780 level. Watch for possible long setup for near-term swing up to the 2050 area. I'm not very enthusiastic on silver at this moment, so just kind of keeping a watch on it. Gold is back in this zone here between 1716 and 1677. So if it breaks below this this zone and get underneath the 1677, then look for a move toward the 1546. And if it can move back above this 1716, then look for a setup to play a swing long up toward this 1804 level. So in summary, the move downward from last week, the market could be setting up for this higher low if it could hold the current level support. Although one can easily make a case that this market is heading down to test the June low here. But to make a case that it will go below June's low is probably, I would say, purely speculating right now, because the internals do not support that hypothesis at this time. Not saying that it can, but right now the internal just not showing that level of extreme or heading toward that level extreme to break the June low. So be sure to click the thumbs up to help promote this video on YouTube. Thank you for watching and stay safe.